Have you ever stopped to think about how a huge company decides where to build its next factory? Or, how a tiny startup figures out if it's even going to survive the next 6 months? Well, it's not guesswork, and it's not magic. It's a really powerful navigation tool we're about to explore: financial analytics. Honestly, the best way to think about it is as a GPS for any business, whether it's big or small. So, that really gets to the heart of it, doesn't it? In a world that's constantly changing, full of risks and opportunities, how does a business actually steer through all that uncertainty? How can it get a clear, data-driven peek into its own future? The answer, as you're about to see, is in a specific set of tools and techniques that we're going to unpack together. All right, so here's our game plan for this explainer. First, we're going to cover the business health check, basically figuring out where things stand right now. Then, we'll get into how companies try to peek into the future. After that, we'll explore how they use all this data to make smarter, bigger bets. And finally, we'll look at how they fine-tune the engine for peak day-to-day performance. Okay, let's dive right into part one, the business health check. It's simple, right? Before you can plan any kind of journey, you have to know your exact starting point. For a business, this is kind of like getting a full physical from a doctor. It tells you exactly how healthy you are at this very moment. And the most fundamental tool in that doctor's bag is the profit and loss analysis, or P&L for short. You can just think of it as the ultimate report card. After you add up all the sales and subtract all the costs and expenses, it answers the one question that matters most. Did we actually make money, or did we lose it? But of course, the P&L is just one piece of the puzzle. To get the full picture, businesses use a whole suite of tools. They'll do a balance sheet analysis to see what they own versus what they owe. They'll use margin analysis to figure out just how profitable each individual sale is. Every single tool gives them a different and totally crucial way of looking at the company's health. So, think of these as your business's vital signs. The P&L answers, are we profitable? The balance sheet tells you your net worth, what you own versus what you owe. And margin analysis gets granular, revealing how efficiently you're turning sales into actual profit. Put them all together, and you get a crystal clear snapshot of right now. Okay, so now that we know where we are, it's time to look up at the road ahead. This is where financial analytics starts to feel less like a snapshot and a little more like a crystal ball. It helps businesses predict and, more importantly, prepare for what's coming next. The absolute star player here is cash flow forecasting. You see, a business can be profitable on paper, but still go under if it runs out of cash. This analysis is all about predicting the actual money, the hard cash, moving in and out. It ensures there's enough in the bank to pay employees, pay suppliers, and keep the lights on. It's not just important, it's a matter of survival. So how does it actually work? Well, it all starts with looking at past data. Then, using cool tools like scenario planning, analysts can model a bunch of different futures. What if sales go through the roof? What if a recession hits? This whole process can even help you figure out the break-even point for a new product, telling you exactly when it'll start making money. But here's the real secret to all of this. Forecasting, it isn't about perfectly predicting the future. Nobody can do that. It's about understanding the range of what could happen and building a plan that's strong enough to handle whatever comes your way. It's all about preparation, not prophecy. And now for part 3, making smarter, bigger bets. Okay, so we've checked our health. We've looked at the road ahead. This section is all about the game plan. It's about using analytics to guide those huge company-defining decisions, like launching a whole new product line or even buying another company. 2 of the most common tools you'll hear about are cost-benefit analysis and return on investment, or ROI analysis. Now, they sound similar, but they answer totally different questions. Cost-benefit asks a really big-picture question. Are all the pros, even the non-financial ones, worth all the cons? ROI, on the other hand, is laser-focused. For every single dollar we put in, how many dollars do we get back? Just look at this, for example. Let's say you only have enough money to fund one of these projects. The data makes the choice incredibly clear. Project B is giving you the biggest bang for your buck by a long shot. This is exactly how analytics helps take the emotion and gut feelings out of these massive investment decisions. And trust me, the toolkit for these big bets is deep. You've got capital expenditure analysis, or CapEx, for deciding on things like a new factory. There's super complex mergers and acquisitions, or M&A, modeling for when you want to buy another company.
There's even business valuation to figure out what a company is truly worth. These are the high-stakes calculations that literally shape a company's future.
All right, let's head into our final section, part 4, fine-tuning the engine. A brilliant strategy means absolutely nothing if you can't execute it day to day. This part of analytics is like being down in the engine room, constantly making these tiny adjustments to make sure the entire machine is running at peak performance. A core tool here is the budget versus actual analysis, or BVA. It sounds simple, but it's so powerful. You make a plan, that's the budget, and then you regularly check how your actual spending stacks up against it. This simple comparison is the financial steering wheel that keeps the company on course and stops little overspends from becoming massive problems.
Now, in today's subscription economy, other metrics become incredibly important. For a software company or a streaming service, a single number can tell a massive story. This number right here, for example, represents monthly recurring revenue, or MRR. It measures the predictable, reliable income stream that is the absolute lifeblood of that kind of business.
And the list of these operational tools just goes on and on. From tweaking the price of a product to get it just right, to managing daily expenses, to making sure you're compliant with tax laws, these analytics are the gears that allow the business to run smoothly, efficiently, and legally every single day. It's such a simple truth, isn't it? You can have the most brilliant strategy in the world, but it all just falls apart if the day-to-day execution isn't there. Operational analytics is the bridge that connects that high-level vision to the ground-level reality.
You know, it really all boils down to this famous quote from the management legend Peter Drucker: "What gets measured gets managed." Financial analytics, at its core, is the system of measurement. It makes performance visible. And by making it visible, it makes it manageable.
So at the end of the day, these concepts aren't just complicated tools for Wall Street bankers. They're the universal language of smart, sustainable business. It doesn't matter if you're running a giant global corporation or the coffee shop on the corner. Understanding these principles is the key to making better decisions and building something that's meant to last. So, I'll leave you with this question to think about. Now that you've seen the toolkit from a simple cost-benefit analysis all the way to ROI, which one of these tools could you maybe apply to a big decision in your own life or your own career? The logic is probably more universal than you think.